I think there are indicators that would point to different directions for the economy and ultimately for the market as well. On the business-to-business side, we've seen resilience in healthcare and resilience in technology. In healthcare, there still is a bit of a rebound effect from the COVID period. In technology, we've seen very strong retention rates, particularly in software. We've seen quarter to quarter a little bit of slowness in converting pipeline into new customers because I think people are a bit cautious about making long-term commitments, though we've seen some improvement in that over recent quarters. The high-end consumer has hung in quite well, but certainly inflation has had a broader impact on the consumer, and particularly the lower-end consumer. All of that leads to an environment in which I think there's a fair amount of muddiness and a lack of clarity around where the economy is headed. For us, that has really led us to be particularly focused on our strategies, on executing our playbook, and sticking to the areas that we think we know very well and have built up conviction in over multiple years. There also are areas that we're investing heavily in that are extremely well positioned from a secular growth perspective, climate being one example. There's such a tremendous need for climate capital across the globe. The need's not the same in every part of the market. And frankly, the public markets are investing behind areas of climate that we think may not be quite as compelling as areas of the private market. So that's another area that in some respects is less exposed to the economy by virtue of the dramatic overall needs in that market. That for us is another area that we've been investing heavily behind.